Hi everyone, this is a technical analysis on USDJPY. Let's start with a fundamental overview first. The USD appreciated a little the day after the FMC decision, although it seemed more like a technical pullback as the central bank didn't offer anything new. In fact, the Fed just delivered on expectations, keeping rates steady, reducing the Q2 pace, revising growth lower and inflation higher, and keeping the dot plot mostly unchanged. Fed Chair Powell just acknowledged the current uncertainty around Trump's policies and the inflation outlook, but confirmed that the economy remains healthy and the Fed is in a good position to wait for more clarity. The market is pricing around 69 bps of easing by year end. On the JPY side, the BOJ kept everything unchanged as expected, with the statement acknowledging heightened uncertainty surrounding Japan's economy, adding a new reference to the evolving situation regarding trade. This suggests that the policymakers are closely monitoring Trump's tariff policies, with global trade developments remaining a key risk factor for Japan's outlook. The market continues to expect 33 bps of tightening by year end, with particular focus on inflation data. Now, on the daily chart, we can see the USD JPY is testing this major trend line. This is where we can expect the sellers to step in with a defined risk above the trend line to position for a drop into the 140 handle. The buyers, on the other hand, will want to see the price to break higher to start targeting the 160 handle next. On the 4-hour chart, we can see more clearly the bearish setup around this trend line that may end up in a double top at this strong resistance zone around the 150 handle. The sellers will likely pile in around these levels with a defined risk above the trend line, while the buyers will need to see a break higher to gain more conviction for further upside. On the 1-hour chart, there's not much else we can add here, as the sellers will look for a rejection around these levels, while the buyers will look for a break higher. A break below this upward trend line and the neckline of the potential double top at 148.18 will likely increase the bearish momentum as more sellers will pile in. These red lines define the average daily range for today. For the upcoming catalysts, today we get the US flash PMIs, tomorrow we have the US consumer confidence report, on Thursday we get the latest US jobless claims figures, and on Friday we conclude the week with the Tokyo CPI and the US PCE report.